Right guys, just thought I'd just make this video as I'm just seeing a lot of beginner traders online having sort of the same sort of issue, and I just thought I've got a bit more experience than them. I'm still on the journey with a lot of people as well before I go full time, still at my day job, but the people at the beginning stages, I feel like I can help them. So I saw this one fella and many other people as well. They're just trying to be way too precise with their entries. Now, if you look at the best traders, the people that are consistent, they're not trying to get these so precision entries all the time. Yes, you can do that, but that comes with a lot of time and experience in the markets. If you're only a couple of years in and you're trying to get these sniper entries, not saying it's impossible to do, but some people can do it, yes, but the majority won't be able to. My advice to these people is just go up a few time frames. Make sure your entries on the 15, maybe even the hour. Just allow yourself to have a bit more time and wait for the best entries before getting involved in the markets. Now, if I just go onto the charts here, this is a trade that I took today, for example, on the 15 minute. Now, I used to be one of these people who were trading on the M1 and I did have success, but it came with a lot of drawdown. And this one I'm seeing happen to people. They're past their phase one and then they will get onto the phase two and all of a sudden they've nearly blown the account. They've nearly lost 20 trades in a row because their strike rate's so low on the M1 time frame. Whereas if they went up a few time frames, it would drastically increase their strike rate and they would take less trades, strike rate increase, and so on. So if I just show you here this trade that I took on pound Swiss today, I'm not going to go into the finer details, but you can see here this is taken on the 15-minute time frame and it gave me a 5-to-1 risk to reward, and it's a relatively simple strategy entry. I actually took it on the 5-minute, I believe, because you can see if I get this drawing tool up here, you can see there's the breaker structure, and I wanted price to come into that breaker structure before getting short, which also lined up with a few other confluences. And we also had, you can see we had a left shoulder head, and then this is the right shoulder developing down there, which makes a QM. But yeah, there's other confluences why I took this trade. And also they just need to know where you are positioned in the higher time frame. Now, this is something I struggled with at the beginning a lot, trying to play the market both sides. So say I'm bearish on this market here, I'm bearish. I want to be looking for shorts, clear liquidity here being these equal lows. And instead of just waiting for a clear short setup like this, say price was here, like Monday, Tuesday, I'll be looking for entries to play the long before the short. And yes, that once again, that can be done, but this long, when we're in a bearish market structure, is low probability. Now, as a beginner, why do you want to be taking low probability entries when you could just wait for the high probability setup and just take that? Because this one trade a week, that's 5 hours in a week. You don't need, you're not trying to flip an account from 100 to 1 million, even though some people online might claim that they have done that. But what I found out again recently is a lot of people that you see online, they're all faking it. They are literally all faking it. They're trading demo, they own the broker, they're faking the MT4 screenshots, it's mental. So people might show you can flip 100 to 1 million, but yeah, wouldn't trust it. But back to this. If you look at the higher time frame, we're in a bearish market trend. So why would you therefore go on to, say, the 15-minute time frame and try and play this run up here when you could wait for the high probability setup to occur and just play it short? So yeah, my advice to the beginner traders is use your entry time frame as a higher time frame, so 15-minute, 1 hour. Get good at that, and then if you really want, go lower. But if you find profitability trading these other time frames, why would you change? Because at the end of the day, that's what you're trying to do. You're trying to become profitable, extract money out of the markets on a regular basis. So why are you trying to get these 1 to 20, 1 to 30 risk to rewards where you can just get consistent profits from the market, 5, 3R, just wait for the high probable setups and understand where price has taken liquidity and where it may be heading. So if I just go into this one again, this high was the previous daily high, right? Here we took out the previous daily high, okay? This was 6 a.m. I'm not on the charts then, I'm on the charts at 7. So we're down here when I'm on the charts. And there is technically an entry here. But I didn't take this first entry because from my testing, when you get high at 6 or before 7, it's likely to get ran before the actual breakdown occurs. Now this comes with testing, okay? And this is another thing beginner traders need to do. They need to test more. You might think you have a strategy, you might think you have a system. And I'm seeing new people blame price action on why they're not profitable. Oh, this month price action has been rubbish, so my strategy hasn't worked and I'm in 10% drawdown, I've blown the account, whatever. It's not price action's fault, it's your fault. You have been taking low probability setups and just can't sit on your hands and wait. And then I'm guilty of this too. I've been guilty of this many a times in the past, and that's why it's taken me a long time to get to this position where I'm comfortable waiting for my setup. I know exactly what to look for. I'm not trying to take low quality trades. And you just need to be patient, know your system. If you've taken 10 losses in a row, you need to go back and look at all your screenshots and understand why you've been doing this. You haven't tested enough. If you're 2 years in, you really think your system is robust enough to last long term if you're experiencing 10% drawdown. No, you need to test, and this is the only way you're going to get better. So if you're just in drawdown and you're just blaming price action, this is not how you're going to become profitable. This is not what's going to work for you. You need to test your system over years of data. You need to get all this data and go back through the trades you've taken this year and see what works, what's been working. Are you in a position where it's high probability to go in line with the trend? Why do you want to be getting chopped up in a ranging market? Just wait for one quality setup a week and that's it. That's all you need. People are shooting for the moon. Just one quality setup a week is really all you need. So for those beginner traders out there, really just understand that one, your positioning in the market, like where you are on the higher time frame, where are you likely to head? Okay, we're likely on pound Swiss to come and retest this trend line, which is this trend line here. That is highly likely, but I took my profit at the low hanging fruit of the previous daily low for 5R, and I'm content with that. I'm happy with that. We could take out this low, yes, and we could take out this low, which also lines up with these equal highs. That's high probability as well. But that could play out tomorrow, and I'm not able to be on the charts tomorrow, so I don't want to hold this position. So yeah, understand where you are as a higher time frame. Stop trading on the M1. I'm not saying you can't trade on the M1. I'm not saying people can't do it. People can do it. But if you're working full time, if you're not fully profitable yet, M1 is probably not the way to go. This is just my advice and what my experience tells me to tell you. Hope that helps, and I'll catch you in the next one.